What's going on, everybody? This is Black Men Sundays. I'm your host, Corie Murray. This is a podcast about generational wealth, finance, and business. But before we introduce today's guest, my brother Eric, who do you have for our Black Men Sunday Spotlight?
Hey, Corie. Hey, thanks for the intro, man. Hey, I got anybody remember back in the day, we had a character on television named Doogie Howser. Anybody remember that back in the 90s? But anyway, if you don't, this person needs to move over. Doogie Howser, for instance. You know, I got a real life team that's tapping at the next American medical phenomenon. Now, after graduating from high school last year, this young baby girl, who is named Alina Wicker, has just been accepted into medical school. And you know what? Old girl is only 13 years old. Now, Wicker, who is currently a junior, studying at two universities. One is Arizona State, and the other one's Oakwood University, which is here in Huntsville, Alabama, has been accepted to the University of Alabama School of Medicine for 2024. And after getting her admission letter, Wicker took to social media to express her excitement. And this is what she says, quoting her: "Today, I'm just grateful. I just graduated from high school last year at 12 years old. And here I am, 1 year later. I've been accepted to med school at 13. And she posted this on Instagram. "I'm a junior in college. Statistics would have said I would never have made it. A little black girl adopted from Fatona, California, but I worked so hard to reach my goals and to live my dreams." And that is today's spotlight, Miss Alina Wicker, 13 years old, going into medical school.
Yeah, you just had to mention somebody from Hunts Vegas, huh?
Absolutely, man. You know, Huntsville got it going on, man. Number one, hey, and I got to put this plug in real quick. This is the number one city to live in the country. The number one. Not number two, not number three, but number one.
I hear you, man. You know, that was a powerful Black Men Sunday Spotlight. This is my man, Eric. We do it every Sunday. Even though Black History Month is over, Black Men Sunday Spotlight lives on throughout the year. Now let's go on and introduce our guest. This brother here is a certified financial planner. This brother owns the TOAMS Financial Group. I didn't say he works there, I said he owns it. This brother's a game changer on top of that. Let B are the letters on his stock exchange. Y'all are like, what is that? It's the first that I've seen Black-owned AI-powered ETF. We're going to get into all that. My man, Mario Payne. Welcome to Black Men Sundays, brother. How you doing?
What's going on, man? I'm happy to be here.
Now, Brother Payne, we got to get this party started, man. You're a certified financial planner. You're the TOAMS Financial Group owner, you know, because the way I met you, you know, it's interesting. A Facebook post popped up on my Facebook. My wife said, "You sure that's not spam?" I said, "Well, let me respond back." I think it was your assistant.
Yeah,
that said that. Yeah, she said that she listens to Black Men Sundays and she thought you would be a great speaker. So fellas, when I say the spiderweb effect, this is it. His assistant reached out, listens to the show, and here he is on Black Men Sundays. So let's get into it, man. You're a financial planner. Mm-hmm. You're the owner of the TOAMS Financial Group. How did you get that started? What made you want to go into being a financial planner in the beginning?
You want the long story or the short story?
Give me the Black Men Sunday story.
To keep it real story. All right, so I graduated from Tennessee State, so I'm born and raised in Cincinnati. I graduated from Tennessee State, so definitely support our HBCUs, definitely. When I graduated from Tennessee State, I was in an internship program called Inroads when I was in college. So when I graduated, the internship company I was with was General Electric. So they hired me, which was great. So they hired me. I was a manager of like a call center, and then I did financial analytics work for them as well. So they had me a task to kind of save money to call center, like how to find ways to basically cut costs in a call center, right? So it was about a 6-month project. I saved them when it came to everything. They did a whole analysis. They implemented my plan. It saved them about $4 million. So when I saved them $4 million, you know, you would think I would get something, right? I was making about 50 grand a year. Now, right out of college, that was still great. You know what I'm saying? So I'm definitely thankful for the opportunity. But man, do you know, saving them $4 million, they gave me a pizza party. Literally, and you think about in 2006, $4 million with inflation is like dang near $20 million today, right? And I got a pizza, and I don't even like pizza. I don't even like pizza like that. You know what I'm saying? So I was just like, what? It got to be a better way. So from then I was like, man, how can I find a way to analyze companies? Find ways to make money through a company, but then get the money and then help people doing it. So I grew financial advisor, and then I just went through the process of trying to get hired. I interviewed with about 6 or 7 different companies. 6 said no, 1 said yes. So in 2007, I got hired at a firm called Edward Jones. I did that for about 6 years. But over that course of time, it's like, okay, I'm bringing y'all money. Edward Jones is dead. So people coming to Edward Jones because of me, not Edward Jones. But you guys are getting a significant cut. Like for every $100 that I made, they kept $60 and I kept $40, but I'm doing all the work. Makes no sense. So basically 2013, after kind of, having a nice book of business, having a nice size amount of clients, I was like, I'm gonna do it myself. So my secretary who was working for me at the time, she came with me and I started my own firm. And basically the rest is history. Now, before then, I became a certified financial planner in 2012, just to kind of have that, just kind of have those letters behind my name. In the advisory community, less than 10% of advisors are certified financial planners. In our community, African Americans, less than 1% are certified financial planners. So that would definitely help me from an advantage standpoint. For African American, one person was certified, they can use me. And then since 2013, I've been rocking and rolling. We have over 1,000 clients worldwide. Have clients in 6 different countries. And I'm just extremely blessed, man. I'm SEC registered. Y'all can Google that to see what that means. It means you manage, a certain amount of assets, which is a lot. And I'm just extremely blessed, man. Extremely blessed.
You have a Black-owned AI-powered ETF. Talk about what that is and just the planning that was involved in setting that up.
Yeah. That was a long process, man. So that's through a company I co-own called Let Bob. So I can't take all the credit for that at all. So I'm definitely an investor, but the person who's the brains behind that operation is my business partner, Anthony, which is just a great resource. He's from Birmingham, Alabama, actually. So he's an Alabama, graduated from FAMU. He went to Alabama A&M, but graduated from FAMU. So definitely supported HBCUs. But yeah, I would say basically 2019. So we linked up and I invested in the company in 2017, but in 2019 we had epiphany, what I'm saying? So we was using technology that's proprietary in my practice, where as easy as it is, we're able to identify what a stock is going to do before it does it. So we're able to kind of buy a stock before it goes up and sell a stock before it has significant losses. Clients were just making money. So he's like, man, we have clients making money. Again, through to my practice, I manage hundreds of $millions of assets. It's like, what if we start our own fund? So we kind of went through the process, talking to individuals who have funds, talking to people who started funds, kind of going through that process. Had a lot of doors shut in our face, a lot of no's. I mean, it's the first Black. So a lot of, how y'all going to do that? How y'all have the assets to do that? Do you know how much it is to manage? What credential do you have? Now, I have my own RA firm. So I'm SEC registered. So I'm not like a regular financial advisor. I'm actually registered with the Securities Exchange Commission. So I'm a little bit different. You know what I'm saying? They didn't know that at the time, but just kind of grinding, man. We finally had a person say yes. We went through the registration process, which is very, very tedious. And then, we wanted to wait until Black History Month. So we definitely launched it this year in February, and the rest is history. And then from a performance standpoint, you think about the market, it's crazy this year on a downtrend, right? The market's down, but our fund is doing a lot better. As of Friday, the market is down about 25%. Our fund is down like 6%. So you got 100 grand. If you're in the market, you lost 25,000. With us, you lost 6,000. So that's the good part, preserving your capital. The best part is when the market goes back up. When the market goes back up, everybody's making their money back. You making money. So just extremely happy and for our fund, extremely happy for the Bob team, who's basically doing everything and kind of let me use my little expertise to help. And we're just rocking and rolling, man. Rocking and rolling.
So let's talk about Let Bob, because you said you put it up Black History Month. Why should Black people invest with you?
Yeah, well, so first and foremost, because we believe what we got going on, you're going to do better than the market, right? So just purely, if I wasn't Black, which I am Black and I'm proud, how we invest individuals' money, the technology we have around our fund, what we do, we have things proven that we, significantly beat what the market does. So if a person wants to invest their money, don't really want to worry about the ups and downs of the market on a day-to-day basis, what the market's doing, is it going up, is it going down? You're able to be in something where you can just put it in, set it and forget it. So that's just one performance standpoint, not even black, white, or other. But African American, yes, again, we are the first and only black-owned ETF that's AI powered on the market. So when you think about ownership, right? Wall Street, 99.9% of Wall Street is white ownership, right? We are now in the game, right? So we have ownership. Not only that, which we'll talk about during the conversation, we're now opening up that ownership to other people. Because of the process we went through to create our own ETF, we created an ETF company. So any financial advisor, any influencer, any endowment like FAMU or Tennessee State, where I graduated from, if they want ownership, they want their own fund on the market, we can do that for them and have them go through the whole process. So instead of going through a 3-year process like we did, it could be done in 90 days and they have ownership of it. So just imagine FAMU, right? So if it was an ETF called FAMU and all the alumni, all the students, all the parents of students that went there invested in it, they're making money in the market, right? But then from an endowment standpoint, the endowment's growing because it's invested properly. Like, how much power that is? We all have endowments, and I'm actually on the Tennessee State Foundation board, so I know how endowments work. Like, it's not transparent though. Like, if we donate to our college, we don't know where it's going to. We don't know how they're investing the money. We might get a email blurb here or there. At Tennessee State, we get alumni magazine on a month-to-month basis, but it's not transparent. But if it's transparent, if you know what's invested in, you know how much is growing, you're going to want to invest more, which is great for the university. So just but besides the performance, it's just like I said, what we do and how we're doing it. That's really why.
There's brothers out there that say, man, the stock market's legalized gambling. I don't believe in it. Look how much money people lost. We're in a bear market. Look how much money people lost on Bitcoin and the cryptocurrencies. Why should brothers believe in the stock market first? And why should they invest in the stock market?
Yeah, great question. Wealth. If you want to be wealthy and you want to make money, you want to invest in the stock market. And I do real estate, so I'm not anti-real estate, but statistics show the stock market does better than real estate. Over time, if you invest in the stock market and close your eyes, as long as you invest in a junk company, that's why you want to be diversified or just buy let be. But that builds wealth. Putting your money in a bank account ain't gonna build wealth. Putting all your money in Bitcoin, and I'm not anti-Bitcoin. I own Bitcoin myself, 5% because you want to be diversified, right? But Bitcoin ain't gonna do it for you. It's the stock market. Wealth is built on the stock market. 90% of millionaires have more than 80% of the money in the stock market. So if you want to be a millionaire and you want to have generational wealth, you want to do what everybody else is doing. So yeah, from a losing standpoint, yes, this year is bad. From January to the end of June, it was the worst 6 months since the 1950s, right? It's like an anomaly. It doesn't always happen like this. I tell my clients, I tell everybody, every year on average, the market goes down 4 months, it goes up 8 months. So you're going to have 4 bad months. You're going to have 8 good months. But if I have 8 good months and 4 bad months every single year for 5 years, 10 years, 15 years, 20 years, 30 years, am I making money or am I losing? I'm making money. It's a law of averages, right? So you're not investing, you're just killing yourself. And we know what's going on with inflation. We can all feel it, right? $100 in the grocery store is now $109. Well, if I got $100 in the bank account and I didn't have it invested, now it's $100. Guess what? I'm losing $9. It's going to cost me $9 to take that out of my bank account to pay that same bill. So I don't got $100 in the bank account anymore. Now I got $91. You're losing money. So you got to keep up with inflation. But, on a day-to-day basis, you might make money, lose money, but 3 years, 5 years, 10 years from now, just doing a regular S&P 500 fund, you're good. If you do let be, you'll be great. So yeah, man, you're shooting yourself in the foot if you don't invest. shooting yourself in the foot. Just like on, what's that movie? Harlem Nights, and you got shot in the big toe. You're shooting yourself in the big toe. You don't want to do that. You don't want to do that.
So you're a financial planner. We've had financial advisors on the line. We've had accountants on the line. We've had CEOs on the line like yourself. Just talk to the brothers out there. Just tell us the services that a certified financial planner provides.
Yeah, great question. So nothing against like an insurance agent or a financial advisor. I was a financial advisor at one time. To become a certified financial planner, you have to be a financial advisor, right? So a certified financial planner, you have to have a certain amount of years in the industry. You have to manage a certain amount of money. It's a certification process that's involved. That certification process takes anywhere between 2 to 4 years, depending on how quick it takes you to kind of go through the coursework. I got my certification, my coursework done through the College of Financial Planning, and then I tested, of course. But a certified financial planner basically is a state attorney. It's a financial advisor. It's a insurance agent. It's a CPA. What's the fifth? You stump yourself, Mario. So a CPA, financial advisor, retirement planner, financial advisor, and insurance agent, and 5. So basically those kind of 5 pillars wrap up all into a certified financial planner.
Great. Okay. Because I know a lot of brothers sit back. Oh, I know what they do, but they probably think you something in between a financial advisor and an accountant. But I didn't realize it was all that entailed. So see, guys, when you ask the dumb question, it's not really dumb. Now you learn something. All right, fellas, the stage is open. Let's go.
And so to clarify, because we get that all the time with like a CPA. Like, so I have a CPA. I have clients that are CPAs. I don't file taxes. So most certified financial planners, especially if they're rock and roller like me, they don't file taxes. But basically, from a tax standpoint, a tax strategy standpoint, a CFP, can kind of build that strategy. Now, a great CFP, certified financial planner, is looking after your best interest. He or she is still going to refer you to a tax preparer or a CPA to make sure everything is on point, right? They're not going to say, let's use this strategy and my way is the highway. They definitely they should refer you. So again, I have clients that are CPAs. We do tax strategies all the time, but we still want them to talk to a CPA just to make sure it's on the up and up. But yeah.
Hey, what's up, Mr. Payne? How you doing? This is Commissioner Scott.
The commissioner. It's just Mario. It's just Mario. It's just Mario.
Got a couple of questions. First one, because we use the term ETF a lot. Could you explain to the listeners what exactly is the ETF? And then the second question is, what is an AI ETF? And how is that better than a non-AI ETF?
Oh man, great. The commissioner with the questions. I like it. All right. So first off, an ETF. An ETF stands for exchange traded fund, right? So you think about a mutual fund. So a mutual fund by itself is not sold on the stock market. It's on like the secondary market. So it's not as liquid. So think about a ETF as a mutual fund sold on the stock market, meaning, when you sell it, it's liquid. You can get your money back right then and there. Then also from a cost standpoint, the internals of an ETF is a lot. Well, I'm gonna say always, but in most cases, ETFs from an internal cost standpoint is not as costly as a mutual fund. So it's diversified. So you think about a pool of investments. You think about a swimming pool, you got 30 swimmers, right? You might have 25 good swimmers and 5 people that's just drowning all the time. You know what I'm saying? So an ETF, you're diversified, because if 25 swimmers are doing good and 5 swimmers are doing bad, theoretically speaking, you're making money because you have more good than bad. From a management standpoint, if you have a ETF manager who's managing and is the lifeguard taking those 5 bad swimmers out that pool, then you're always going to be consistently making money, right? So that's what an ETF is. The AI. So AI means artificial intelligence, right? And this is very, very key from an automation standpoint. Now, automation is not my department. So I manage money. Again, the Let Bob team has done a great job creating things that allows the automation to happen. But because of everything being automated, because what we have done is automated, because the automation, the technology we have in place, we're able to basically predict when something is going to go up from an investment standpoint and when something is going to go down. So if we're able to predict it before it happens, then that means we get out at a higher price. The whole thought process of investing is selling high and buying low. So if we're able to get you out before an investment goes down, and on the flip side, get you back in while it's down before it goes back up, you're not losing money on the upside and you're making money on the downside when it goes back up. So when we say AI, that's artificial intelligence, and that's tech, and tech is the future. And if people aren't in the tech, using tech to their advantage, they are missing the ball.
So with the AI, it's kind of like you've always got intelligence, so to speak, letting you know when you should get in and when you should get out, right? So you can't really lose like that, right?
Well, as a certified financial planner, of course, we can't guarantee anything when it comes to the stock market, right? And then, of course, past performance does not guarantee future results, right? Well, I was going to use that disclaimer, but yeah, that's our hope. Now, of course, nobody gets it right 100% of the time, right? Anytime a person invests money, we don't know what the market's going to do on a day-to-day basis, month-to-month basis. But we do have things in place that allows us to be pretty consistent. And if you're consistent and you're consistently beating the market, then and then from a risk standpoint as well, if we're out of something before it has the possibility of going down, that's going to help. So if we're able to kind of eliminate or reduce risk and still give you the performance, that's the name of the game. Any investor, one of the reasons why they don't want to invest because they're scared to lose money, right? So if we're able to reduce that risk and still have you make money, we in the game. We are in the game. So yeah.
Yeah, when I heard you talking about it, from an engineering perspective, first thing I was thinking is, oh, they've given free risk analysis with their predictions. So I definitely want to check it out. Your company is Let Bob. What's the website?
Yeah. So our symbol in the market is Let B. So LET, B as in boy. Again, we might get to it later with our ETF platform we have, and also our investment app that we have as well. But our ETF platform is Let Bob, so LETBOB ETFs. So Echo Tango Frank Sam, letbobetfs.com. That goes over our ETF platform if somebody wants to launch an ETF. And then our investment platform is letbob.com. So www.letbob.com. You'll see the bio of our CEO, Anthony. I call Anthony our Steve Jobs, like literally what he got going on. It's just crazy what's going to be happening from a Let Bob standpoint and what he got going on. It's just amazing. Just blessed to be around him and the rest of the Let Bob team. But yeah, so letbob.com or letbobetfs.com, and then the symbol that's on the stock market is Let B, LETB as in boy. Just Google Let B. It's fact sheets. It shows you this year how the market has been crazy, how we've been in cash most of the year. So think about it. You can't lose money in the market when you're not invested. So over the course of March, April, May, June, July, we're mostly in cash when everybody else is losing money. That tells you what you need to know right there.
I appreciate that. Thanks. Hey, this is Commissioner Scott from Atlanta, Georgia, over in the United States. My next question is, how has your involvement with Dave Ramsey's SmartVestors prepared you to be an even more effective financial planner for your clients?
That's a good question. We ain't talking about Dave Ramsey, man. Yeah, so yeah, I'm a Dave Ramsey SmartVestor. So of course, Dave Ramsey is known in the financial literacy space. What he does from like a budgeting, getting out of debt standpoint. I mean, he is who he is. Like anytime you close your eyes, think about budgeting, he's one of the first people, if not the only person you think about. So basically, his team reached out to me back in 2018 and said, hey, we see what you got going on. Would you like to be a Dave Ramsey SmartVestor? And I was like, okay, so what is that? So that basically means that he endorses me. So I had to go through an interview process. They had to basically kind of look up my U4, which is like a financial advisor report card. So ain't nobody sued me, ain't nobody, Mario lost all my money. Over 15 years, ain't none of that going on. but yeah, so I went through a couple of interviews, and then they said, yeah. So here in Jacksonville, where now, of course, I have clients in 40 different states. And since I'm Securities Exchange Commission licensed, I got clients all over the place. So it doesn't matter where you're at. If you want us to help, we definitely can. But here in Jacksonville, Florida, where I'm located, they have 10 Dave Ramsey endorsed financial advisors. Of course, I'm the only African-American one. So through his philosophy, as we talk to clients, we talk about getting out of debt. We talk about helping them with their credit. I actually hired a financial coach, like actually who works, for us. She just does financial coaching. So if a person is not there yet from an investment standpoint, but they need help, we have a resource in my office that'll walk them through their budget, walk them through getting out of debt, walk them through beefing up their savings account so they can get into a point of investing. So again, when it comes to helping our community, my firm, TOAMS Financial, is helping our community, even when it comes to not even investing your money, just getting you out of debt and putting you to a point where you can start investing. So yeah, and that definitely from a validity standpoint helps too. You know what I'm saying? I don't even talk about it that much because it is what it is. But I mean, yeah, I'm a favorite smart guy. Like he endorses me. Like if you go to this website and you type in Jacksonville, you see me smiling. So yeah.
I appreciate that. Thanks.
Is he African American?
Yeah. How you guys doing? Yeah, I'm an African American here in Jacksonville.
You a CPA?
Yeah, well, yeah, I'm a CPA candidate. Yeah, I'm actually in the process of passing the exam. So I'm halfway there, so I'm almost there. But yeah, pretty much that's the route that I'm on. So
yeah, now you need to hit me up, man. I definitely always love to help my people. So you need to hit me up.
Okay, no problem. Yeah, so I've been taking everything that you been putting out there and everything. So I definitely in the process of trying to diversify my portfolio and everything. So I'm definitely going to have to reach out to you. Obviously, I get my contact information from you, today or whatever before the session ends and everything. But definitely, I kind of want to get your perspective on where you think the market is going right now. Obviously, kind of get your idea of what you think is going to happen within the next 6 months. So, and how do you think everything's going to bounce back, or do you think we're going to still pretty much be in the same trajectory that we've had the past few months?
Yeah, great question. And I always preface the market by nobody knows but God the future. So you listen to me, you listen to people on all the news channels that you see, they don't know, right? So we're all making educated guesses. So I'm going to tell you what I think. I'm going to tell you what's going on historically, but I might be wrong. And I'm just being as transparent as possible, right? Got to keep it real though. So the past 6 months, the market has again had its worst 6 months since the 50s. So just crazy. But until then, we had a heck of a ride. I mean, we've been in a secular bull market. A bull market is when the market is going up, right? So you think about a bull, they raise that head and get you. Think about a bear, it claws down, right? So we think about a bull market, it means it's going up. We've been in a bull market really for 12 years. So this was bound to happen. In the year 2020, it happened for 2 months. And then we had quantitative easing where the federal government just pumps money into the system. Everybody got those PPP loans. Some people went to Gucci and Louis. Some people went to the stock market, right? So this was going to happen in 2020, if not for, the federal government pumping money to the system. So I say that to say, as of this year, it looks like we hit our bottom the second week of June, right? Since June, I think the 13th or 14th, the market has been up. The market kind of retested itself where it almost went down below that down mark, but it didn't happen. So if that's the case, then we have hit our bottom, right? Our bottom happened on June 13th. So if things hold true like it has been holding true, the worst has already happened. So you think about $100. If I had $100 and now I went from 100 to 60, I've lost $40. Even if it goes down by $5, the worst has happened. I already lost $40. If I lose 5, I lost 5 more, but I ain't lose 40 more, right? So if you think of it that way, the worst has happened. When is it going to go back up? Again, nobody knows but God the future. Historically speaking, though, when something this dramatic happens, you're looking at 12 to 18 months. So if it's at the end of next year where the market gets back to where it was, okay, that's basically 2 years of the market not doing anything. Right. So if I got $100, it goes down to 60, and then December 31 of 2023 goes back up to 100. I'm back even. Right. So if you look at it that way, 2 years, I ain't losing no money. The previous 6 years I made money. I'm cool with that. As a new investor, though, this is the best time to invest, even if it goes down a little bit more, because you're able to buy something that literally back in October for the NASDAQ standpoint, it was worth $100. Now it's worth 60. So if I buy something at 60, it being down by 40% means I get a 65% gain. So if I sold something at 100, that's why I let Bob is what it's doing. But if I sold something at $100 and now that $100 investment is worth $60, right? That same $100 I invest in, when it goes back up to 100, my $100 is now $165. I done made 65%. it takes the market on average makes about 10% a year. So I basically did in 1 year what it takes the market to do in 6 years. So if you look at it like that, this is the best time to invest. Even if it goes down a little bit, you're able to buy something at such a deep discount. I mean, so I would not be afraid of the market. I would say investing today, you'll get it in at a better price than what you did 6 months, 9 months ago. But you should not be scared. And even if it does go down a little bit in the next year, especially going into 2024, you would have made your money back and then some, and you'll be a very, very happy person. It's like a house. And it's crazy. I'm rambling, but I'm transparent. It's crazy in our community, though. We look at stocks way different than we look at a house. If you look across the street and it's a house in January that was worth $100,000, and that same house today is worth $60,000, are we going to wait till it goes back up to $100,000 to buy it? No, we're going to ask our mama, our daddy, our cousin and them to put some money in to buy that $60,000 house because it's at a huge discount. But we don't think about that as stocks. When it comes to a stock, we want to wait till things get better until it goes up to buy it again. It makes no sense, right? You want to sell high and buy low, not sell high, wait till it goes back up again and buy it at the same price. It makes no sense. So I would strongly recommend, if you have some coins, this is when you want to invest, even if it goes down a little bit lower, because again, historically, you're buying something at a very, very, very deep discount.
Yeah, good point, Mario, man. Because when I talk to especially young investors, they say, man, you told me to get this stock, I got it, man. It's down $10 today, and I'm like, yeah, but it was up. It was up 200. It's down to like 150 now, but it's still a buy. But a lot of young investors I see don't really get that, and then there's brothers that I know that they have the money, but they're like, it's dropping. I don't believe in it.
Nah, that's the worst decision ever, man. And you think about it like investing. If I had $100 5 years ago in the stock market darn near doubled, right? So if I had $100 up until last year, that $100 would have been $200. So $100 is $200. Now it goes down to 180. If I start with 100 and now I have 180, what have I lost? Nothing. I started with 100, right? But again, just when it comes to stocks, I don't understand. And I see a lot in our community. I have clients that are different nationalities, Caucasian, Hispanic, and again, this is our community, nothing right or wrong about it, but like we just look at investing just differently. And that's why, from our ETF standpoint, we're hoping what we do when it comes to reducing the wealth gap, providing knowledge. So one of the things with our investment app is a lot of education there to kind of help you educate about the market before you invest. Like hopefully the stigma of us, being scared to invest goes away, because this is where you want to invest. You want to invest when things are down. Now, even last year when the market was up like crazy, it was still a great time to invest, because 5-10 years from now, you're going to have more than what you started with. So invest. But yeah, we got to get over that, man. Like money and wealth is being made from investing. Yes, you can make money off of real estate, but statistically, not what we see on Instagram, not what we see on YouTube, not what we see on TikTok, but statistically, you make wealth by investing in the stock market, not by Bitcoin, not by opening up a Shopify store, not by doing Forex, not by day trading. 90% of day traders lose money. So for every 100 people who day trade, 90 of them lose money. They don't put it on TikTok, but they do. It's long-term investing. That's the wave, man. So yeah, we gotta invest, man. Invest and let be, and forget about it. Let it grow. Think before it a couple years or a couple months.
Yeah, actually, I did have a question. So this is Kayla. So my question is, so you said that at the beginning of this year, the market has experienced like an all-time low, which we know is temporary. Now, could you clarify? Because I think you said that at that time, your investment strategy was actually to exit the market at that time and have some money in cash. What were some other, I guess, the other cash vehicles or other things that you kind of parked your money in while the market was down?
All right, so two different things going on, right? So we have our ETF, and of course, I have my own investment firm, TOAMS Financial. So with TOAMS Financial, of course, we have clients in our ETF, but since I'm a fiduciary, we can't put everybody's eggs in one basket, right? So let's talk about my investment firm first. So with my investment firm, as we sorted out the market, you have different funds that are money market funds. Not promoting anything, but just for example, ICAS, ICSH, SPSB, ULST. These are basically ETFs that are money markets. So they're money market ETF. So again, the thought process is that the market's going down and you're in a money market where you're not losing any money from a stock standpoint, you're preserving your capital. So if I got $100,000 and I have now that $100,000 in a money market, if the market goes down by 20%, I don't lose $20,000. I still have 100,000. So while it's parked there, when the market's going down, we're preserving your capital, right? So then as the market turns around and we feel that it's a now higher chance of going up and not down, then that $100,000 in that money market that you had or that money market fund will go back into the investments that we do. So again, you're not starting at 80,000 like everybody else. If the market's down by 20%, you still have your 100. So if the market goes up by 20%, your 100,000 goes up by 120 compared to everybody else making their money back. So now you're $20,000 richer. And then with compounding interest, right, now you're making money on top of your money, which is, I think Albert Einstein said the secret of investing is compounding interest because you're making money on your money. So that's what we did for our clients in my investment firm, TOAMS Financial. When it comes to our ETF, and a great thing about an ETF as well, like, we see people on TikTok, YouTube, kind of saying what they did, how to invest the money. Anytime you have a fund, it's public record. So you can go Google the fund and go to the fact sheet, and it tells you how the money was invested, what it was invested in. So as the market had its downturn, we was in cash. So again, if you're in cash, you can't lose money if you're in cash. Now, of course, we wasn't 100% in cash. We did have some in the market, but from a performance standpoint, if we're down by 6 and the market's down by 25, I mean, that lets you know all you need to know right there. So yeah, not to say that we get it right all the time, not to say that anybody gets it right all the time, but definitely the things that we have in place is allowing us to, right now beat the market. And then as the market goes back up, then preferably, we'll make a lot more than everybody else when the market gets back to where it was.
Okay, thanks. And I also had just like a follow-up question. So, we know that inflation is at record high rates right now. So how is inflation impacting those strategies as well?
Yeah, great question. It's really not. Okay. Right. From an inflation standpoint, inflation is really affecting people's pocketbooks more than anything. Well, let me take a step back. So inflation from a consumer standpoint is hurting our pocketbook, right? $100 in a grocery store last year is now $109. That's real money. It takes us more money to pay and buy for groceries than what it did. Inflation does hurt the stock price of a company, right? So the value of a company is basically their stock, right? And the stock market is forward looking. So the stock market is basically what they view the economy over the next 12 to 18 months is forward looking. That's why, like, we had a recession in 2009, the market was up in 2009, right? We had a recession actually in 2020. We had a mini recession, had a recession in 2020, but the market was up, right? Because it's forward looking. But from a stock standpoint, if stocks have a lower profit margin, right? If they have less profits because it costs them more to run their company, then that's going to hurt their stock. So if it hurts their stock, then yes, that might drive the stock market to have less growth than what it would have been. So I guess you can say yes, with the market being down, some of that is due to inflation, but inflation is being, in my opinion, because only 34% of Americans invest in the stock market in general, which is crazy to think about, right? In our community, 12%, right? So we have all this, generational wealth, and we're watching all this TV, and we all on Instagram and YouTube and looking at stuff, but only 12% of African Americans actually invest, right? It's crazy. So from a consumer standpoint, I think inflation is hurting us more than from a stock standpoint.
Appreciate that.
Mario, I got a quick question, more of a comment, because you mentioned education and how we're not educating our people, or our people aren't educating themselves, right? So I'm looking at it from a foreign language standpoint. When I was a kid, I got exposed to Spanish, and I speak Spanish pretty decently, but I was exposed early, right? So what can we do Like, even if you're in the hood, we in the projects right now, right? And how can you educate your kids, or is there a book with basic terminology of financial terms that they can just start exposing themselves to right now, so it won't be so foreign to them, so they won't be scared to invest? I think they're scared sometimes because they just don't know what these words mean sometimes, if that makes sense.
Yeah. No, that's good. Yeah, financial literacy is huge. So I know, Rich Dad Poor Dad, like that's a great book, just about finances, just about education in general. Anthony O'Neill, he used to be a part of Dave Ramsey, but like he caters towards the youth. He came out with a book a couple years ago talking about, and I forget the name of it, which is horrible because I read it. But yeah, but just Google Anthony O'Neill. He came out with a book a couple years ago about debt, financing, getting your finances in order from a younger person perspective. And he's African American as well, so even better, you're getting it from his perspective. Those are two books that I would look at. For the younger though, I would say, use YouTube. Use, like, growing up for me, wasn't no YouTube, right? I just turned 40 this year. Like when I was 16, 17, it wasn't no YouTube. I mean, Facebook was just it was called the Facebook when I was in college, but it wasn't like it is now, right? So I would say go on YouTube, just type financial literacy. There's so many free classes that kind of gives you the basis of financial literacy. And financial literacy is not, I'm going to learn about finances and then I'm going to be a millionaire, a billionaire. What financial literacy does do, it gives you the foundation of finances so that you don't invest your money dumbly. You don't go and get into a scam. You don't put all your money into crypto. I'm not anti-crypto. Again, I own Bitcoin, I own Ethereum, so I'm not anti, but not all my money though. Right. So financial literacy allows you to kind of understand finances to the point that you don't make any mistakes. You don't see a person pushing nothing against anybody, but pushing a real estate fund, making 100% a year, and you put $10,000 into it and lose all your darn money. Like if you have financial literacy, that's going to help you from making those mistakes. So yeah.
We also want to talk about real estate. You said the stock market and the real estate's really big. I've had a ton of people on here talk about how big real estate is. So I'm going to ask you this. With the inflation, should I wait until October, November to buy property, or should I buy the inflated price now?
Is that rhetorical? Nah. So yeah. So, and we have history, right? So history has a crazy way to repeat itself. So just look what happened in 2007, 2008, 2009, right? When a recession happened, the average, and it was a housing crisis. Now we're nowhere near a housing crisis. We have things like legislation, Dodd-Frank that got passed in 2009, that we're not going to have a crash housing like we did in 2009. But most houses went down by 35 to 40%. So if you look at it that way, things are going to go down. Real estate's actually peaked. April was like at the height of prices. Since April, it's went down for the last 3 months. If we have a recession, what's going to happen? People won't be able to afford their house anymore. So they're going to foreclose a short sale. Now you have more inventory, supply and demand. You have more supply, same amount of demand. Things are going to go down. So I have these conversations with clients almost on a day-to-day basis now, believe it or not. Like, should I buy something? Should I wait? I'm telling people, I'm even myself, we thinking about buying property in Dominican Republic. Literally, me and my wife was talking about it a few weeks ago. Like, I would strongly recommend a person wait at least 6 months. 6 months from now, your house or complex or whatever you want to buy is going to be down in between 10 to 15, at least 10 to 15%. So if it's worth $100,000, in 6 months, it's going to be worth 90,000, right? So yes, I bought it at $10,000 less. Doesn't seem like that much, but unless I'm buying cash, I'm getting a loan, right? Getting let's say 5, even though 5% is high, right? Not right now, inflation, but historically that's high. It's usually about 3.5%. On $100,000, 5,000 a year, that's $5,000. $5,000 over 30 years is $150,000 of interest we have to pay. Now, yes, we get to write that off, right? Depending on how we do our taxes, but it's still $150,000 compared to $90,000. $90,000 at 5% is a lot less. It's not $5,000, it's $4,500. Well, 4,500, now we're not at 150, we're basically at compounded interest about 125,000. So it's 10,000 now, right? But that's $25,000 that we saved. So that $25,000, you think about over 30 years, we was able to invest that. with compounding interest, you're looking at over $100,000 of at least $100,000 of growth. So, I saved myself 25,000. Then I made an additional 100,000 investing that money. So long story short, I would definitely say, yes, we want to wait until the end of the year, if not into next year, because we're in a recession right now. First quarter was negative, second quarter was negative. So if we have another negative quarter, we're gonna see this push out until early to mid next year. So I would strongly recommend wait. Now, if I got kicked out of my house and I can't do anything, then that's different. But if you have some time and you don't have to rush into it, I would definitely say wait till at least the end of the year, because you're going to get at a lower price than what it is today.
And for the brothers out there that say, listen, man, I don't want to buy a house. I'm good. I just want to rent and spend all my money on the stock market. What's the tip for that?
I keep it real, and because I spent 4 years in the military, is keep it simple, stupid. You always want to be truthful. Like I am big on ownership, right? Ownership is huge. If I pay rent and I'm paying $2,000, that's $24,000 a year. That $24,000 a year over 10 years is $240,000 I've thrown away. I get nothing out of it compared to if it was to a mortgage. I have equity. If I sell it, I get that money back in some way or form. So I would, and then that's just throwing away money. That doesn't include taxes, right? If, again, using that $5,000, if I'm paying interest of $5,000 over 30 years, that's $150,000 of write-offs. So that means the federal government, I'm getting money back from the federal government. We're not paying as much in taxes because of me owning the house. So I would never tell a person to rent and then put all them in the stock market, right? So we want you to have home ownership. Now, if your credit is bad and things of that nature, we want to save. We have some strategies that we can kind of help you kind of grow to get to that point. But just the surface is being as transparent as possible. Like, I'm big on home ownership. Now, if you cannot have home ownership for whatever reason, then yes, you want to invest. Before you invest, though, you want to make sure you have things in order. You have a 401k, you want to make sure that you are doing what your company matches. If they match 5% of your salary and you're doing 1%, you're killing yourself. If I make $100,000, my company's giving me $5,000 a year, but I'm only doing 1%. So that's $4,000 they're not giving me. Over 10 years, that's $40,000. 20 years, that's $80,000. With compounding interest, that $80,000 could be about $240,000 in the market over 20 years. Free money. It's free that they're giving us. So before you do any outside investing, I would say first you want to make sure you do what your company matches. You want to make sure you have an emergency fund. It's Dave Ramsey in me now. You want to have an emergency fund where you have at least 3 months of your expenses, because you don't want to invest in January. The market goes down. Now you need to pull money out of your investment account, and now it's worth less than what it was before. That's a double-edged sword. We're taking money out, which is a no-no, and we're taking out a lower price, which is a double no-no. So we want to make sure we have at least 3 months of expenses in our savings account before we do anything from an investment standpoint. So yeah. And again, I ain't throwing shots at anybody who rent. I mean, what I'm saying? I rented before I bought my house years ago. So it's just that from ownership, especially in our community, like ownership is just huge. Like a lot of different cultures, they preach ownership, they do ownership. In the next 5 years, there's going to be more Hispanics owning than we do. And we've been here a lot longer than Hispanics, just because the thought process of ownership in our community just has not been where it is. Now, it's a lot of reasons why, redlining, of course, Jim Crow, how the whole federal loan process has not been helpful to us. So there's a lot of things that we could not control, but definitely if we have the chance and a wherewithal, home ownership is the way to go.
Yeah, I got one last question before we get out of here, since we got the expert on the line. Some of the guests that Corie has up here has prompted me to start reading more, right? Yes. Start educating myself. So reading this book right here, it's about tax-free wealth, right? Yeah. And, I haven't really had that amount of money to learn how to build wealth by lowering my taxes permanently. But are there any things, I think buying a house and investing is one of them, but do you have any tips on how to possibly lower your taxes permanently that you could talk about?
Yes, that's a great question. Everybody's situation is different. So first off, you want to max out your retirement. Are you a business owner or are you a W-2 employee?
Both.
Okay.
Yeah.
All right. So yeah. So for a business owner, specifically, you can do what you call a solo 401k. If you have more than 3 employees, you can do a 401k, or you can do a SEP IRA. So with the SEP, we'll talk about the SEP IRA at first. We have a simple and a SEP IRA. Simple IRA, you can do up to 17th hour year. A SEP IRA, you can do 25% of your salary up to 53 grand. So literally, if I'm making, 300 grand through my business, that's $52,000 I'm able to write off right then and there. So my income is not 300,000, it's 250. That helps dramatically, right? Also with your employees, you can do up to 25% in theirs as well. So again, when you contribute to your employees, then it's also a tax write-off. Health insurance, like I have a staff, I have employees who work for me. Of course, I pay for everybody's health insurance, right? So their health insurance, 100% write-off for me. So their health insurance, I'm a great boss because of it, of course. But then since I'm paying for their health insurance, I get to write that off as well. So that's another thing that I do. Of course, home ownership, right? So of course, if you have some people want to pay off their house. Again, me and Dave Ramsey, I never talked to him personally, but the whole Dave Ramsey method, that's one thing that I sometimes recommend different, that you not pay off your house, that you kind of get that tax write-off and build wealth by investing, right? So if you have a house, and of course you're able to write off that interest. So those are some things that you can do. If you're an employee, a little bit different, because you're an employee, you can't work around like a business owner, but you can max out your 401k. If you are over the age 50, you can actually do more in your 401k as well, because you have to catch up at 50. So it is things you can do. Also, if you're a business owner, you can do a 401k profit sharing. So I used to do a SEP IRA. Now we do a 401k profit sharing. So the 401k, I'm able to, kind of do the max 401k, put stuff for my employees, but then I have a profit share. So now the profit share, I get to defer more money. So when I defer more money, so some of the profits I get to defer. My staff, I get to prefer my wife, she's an employee as well. So we get to defer all that. So as a business owner, it's a lot more expenses that you can have that you can write off compared to I'm not gonna say regular, but compared to a regular W-2 employee.
Okay, thanks for those tips. I appreciate it.
But nah, man. So I'm just here to help, man. So my socials. So our website is www.TOAMS Financial. So TOAMS Financial.com. My Instagram is @TOAMS Financial. My Twitter @TOAMS Financial. My LinkedIn TOAMS Financial. My business Facebook TOAMS Financial. My YouTube TOAMS Financial. And then like the funny side of me, like the comedic side, I have a TikTok. It's called Painful Profits. So I do videos about different stocks, but with a comedic twist to it. And then also our YouTube is Painful Profits as well. I'm actually shooting a financial show, which is pretty cool. And that's going to be on our YouTube page, Painful Profits. So it's going to be a show that's about finances. So pretty cool. But yeah, man, just look me up, at me, comment. If you have any questions, we're definitely here to help. It's me. I have 2 other financial advisors who work, for me in my practice. We have a full staff, have a dedicated financial coach. So if you guys have investment questions, need help with your investment portfolio, definitely here to help. If we can't help, we can definitely point you in the right direction. And then definitely look us up, Let Be, our ETF, man. Kind of what we're doing from an investment standpoint is pretty cool.
What do I need a certified financial planner for? I know how to count my money. I don't need a financial advisor. I don't need an accountant. But now you bring in a certified financial planner. And why do I need a certified financial planner? And as a Black man, what can you do for me?
So he or she, because it's also African-American female certified financial planner. So if you want one closer to you, if you're like in California, it's some out there. So just not just me, but he or she will be able to help you financially. Like it's so much that we got going on finances wise, so much we got going on, we have no idea. But he or she's gonna be able to break things down, do a financial plan, do a budget, identify how you're spending your money, identify not how you spend your money, but identify ways to help you with your spending, help you find money that you're spending that can be used to go somewhere else, which over time will help you grow your money. And if your money grows and you have more money in 2, 3, 5 years than what you have now, I think is well worth that service that he or she provides.
So, hey, Mario Payne, I hope you enjoyed the Black Men Sunday experience, man. You had a good time?
Oh yeah, good, man. It's good. Always good to talk to like-minded people, man. Definitely had a good time. I'm an open book too, so hopefully ain't talk too much, but I always like the worst question is the one not asked, and the less information is the worst. So definitely, because I've been blessed for doing this for 15 years, because of kind of what I do for a living, how I've been to help people, whatever I can do from an expertise standpoint, I'm an open book. I'm definitely here to help. So, and again, the podcast, man, congratulations on all y'all growth, man. It's great to see our brothers, our Black men on Sundays having conversations. So again, congrats on everything that you guys done. If you guys have any questions, we're always one phone call away.
Check it.